Good morning, everyone. We are live for the first coffee break of 2021. We are very excited you are all here today. And we have a lot of information to cover this year. I'm your host, Rachel Camella, and I am here with Cindy Merkel and Janet Lang from the HR team. And CertaPay is excited for a great year. Today, we're going to be talking about the stimulus and the information in the stimulus that has to do with you guys. We want to hear your questions. We want to answer all those questions and help you guys with this new bill and make sure we all get off to a great start. All right, so let's get started. Well, I guess we have to start by talking about coffee, since we didn't already talk about it enough. But I am drinking a Clovis Vasquez from Honduras. It is wonderful. I hope you all have a great cup of coffee this morning while we dig into this very exciting information. Cindy, what do you have?
I have a Starbucks dark roast. No shots.
Always.
Always.
That's great. How about you, Janet?
Just a simple old coffee off the Keurig.
It counts. I love them all. Okay, guys. So as I said, what we're going to be talking about this morning are the things that we pulled out of the bill that have to do with business owners in particular. The bill is huge. I'm sure you've heard that. There are 5,500 pages, and it has so many different components and so many different pieces of information in there. And so what we've done is pulled out the 6, 7, 8 major things that have to do with you as a business owner and a business leader. So hopefully we pulled out the significant things. I'm going to tell you now, we have not pulled out every single thing, but we've pulled out the most important things. I will also say the information is changing quite a bit. So a little bit of a disclaimer here for us at CertaPay is that we aren't going to have it all. We aren't going to have 100% of the information and answers right now because they're changing so frequently, and there are additional guidance updates and information. And what we promise to do is get you the information as soon as we have it and answer your questions and help you the best we can. Okay, so these are the things we're going to talk about today. Some of the changes and expansions to unemployment, the direct payments, the flex spending changes, the employee payroll tax deferral, grants, loans, and tax credits, and kind of all the things in between there. How are we doing? Good so far?
Yes, I'm ready to go.
Okay, so let's dig in. So when we talk about unemployment and direct payments, the direct stimulus payment cap is $600 per person. It's based on the income from 2019, and there are some variations depending on how people filed in 2019. So that will be going out to all of the individual people. So think about your employees and different people. Those stimulus dollars are already in the works. 600 is the cap right now. We may see some changes again. A lot of this may change over the next couple of weeks, but that's what it looks like now. And so for unemployment, the unemployment weeks of coverage has extended through mid-March. In addition, there are $300 a week added to those benefits. So whatever the state maximums are, $300 is added to the top of that. And that will extend for a maximum benefit of 50 weeks. And that goes through mid-March. So hopefully that will help some people that are in a difficult spot right now to get through the next couple of months. And that's what that looks like. Fortunately, a lot of our delays of the initial unemployment applications and filings have been cleaned up at this point. So if somebody needs to get in there and apply, they should be able to now. We're not hearing as many of the delays as we were, but that extension piece is in place. So that's a good thing. Again, use that chat box anytime if you have questions. Okay, so let's talk about the flex spending accounts. There have been changes to this. Now, this applies to both the medical accounts and the child care accounts. And so what they've done is they've looked at the 2020 year, and they've said that some people may not have been able to use all of their expenses. So that was the thought behind that, is how do we make sure people can use these dollars that they've set aside if they haven't been able to? And with the finances being such a difficult piece in 2020, they didn't want to put anyone in the position where you would lose money. So what they did is created extensions to the grace period, carryover limits, and pushed things out to the future. So unused funds from 2020 can be carried over through the end of 2021, and they can be used for expenses incurred during 2021. So previously, the way it was you had the carryover limit and you had the grace period, but you had to use it for expenses from the prior year. So now what they're saying is not only can you carry it over, your full amount, whatever's remaining, you can carry it over, but you can also use it in 2021 as well. So a really nice little extension there. And then the same thing for 2021, and the same kind of concept applies, is you may have already made your deduction elections for 2021, which would put you in a surplus. And so for that, they're allowing a 2021 carryover through the end of 2022. So some really nice differences there. Very excited about these. And the way they did that, again, was expanding the grace period. So there was a cap on it. Now, the normal maximums that you can have deducted for childcare medical are still the same, but your carryover max has changed to whatever your full amount in the account is. And then you carry it over, the grace period becomes 12 months, which takes you to the end of 2021 and then the end of 2022.
Rachel,
so,
folks,
yeah.
we're going to hold all the questions till the very end. We've got about 50 people on the call, so I do track all your questions, but we will wait till the end to answer them. Thank you.
Okay, good. And I see Jose's question. I'll just go ahead and deal with that while we're in this little section anyway. But yes, these are, if you have flex spending dollars saved in your flex account, that can be used for any medical expenses for somebody on who you claim as a dependent. So these funds, if somebody is out due and you're using your flex dollars to pay the medical bills for somebody on COVID, yes, you can use these dollars for that. You cannot use it to pay for other things. If somebody is out because of COVID and you need money to pay for other things like groceries or rent or other things, you cannot use flex dollars for that. The way you use your flex dollars is very specific and still the same. So those dollars are for approved medical expenses for your medical flex, and for the child care flex, it is for child care coverage. So that's a great question, and I hope I answered it. And so to talk about the child care piece, one of the limits for using your child care dollars was the age of the child. So you could use those dollars for a child up to the age of 13, for a child who turns 13 in the year where you're using the coverage. And so that has been extended to the age of 14, because you may not have been able to send your children to their normal child care provider in 2020, in which case they would have turned 14. So now that's extended. So you can still use those funds this year, even if your child is 14 now, which normally that would not be the case. And then finally, it's important to note that because elections have been made already, you may choose to allow the people who made choices to make additional choices or make changes. So, and this is completely optional for you as a business owner. If you want to allow some of your participants to go in and change their amount for this year, knowing they can carry over their dollars. They may not want to deduct as many dollars this year. So if you would like to do that, then you can open that up to everybody and say, you know, because of this bill, we're allowing you to do this without having a qualifying event. Normally, you would have to have a qualifying event to make changes to anything that is a pre-tax deduction. And under this bill, they're saying that business owners and leaders have the option to allow their employees to make those changes. So what we would caution as HR advisors, again, is be consistent. So if you do make that offer to people, offer to everybody and just let them know you're going to allow a window of time for people to make additional changes. And the way they kind of made up for that, if somebody chooses not to make that change, is the expansion through 2022. So knowing that people may have already made changes for 2021, they can carry over that balance through the end of 2022 if they want to do that. So that kind of makes up, if you don't want to allow them to make a change to their deduction, they can still carry over all of these funds and then choose a lower deduction amount for 2022. So everything kind of gets covered that way. Okay. Are we good on flex spending? All right. Let's move on to the employee tax deferral. So what we're talking about here is the executive order that was signed right at the beginning of the fourth quarter 2020 for employees to defer their Social Security tax for the fourth quarter. And originally, the repayment plan was going to be through the first quarter, all deferred taxes due by March 31st. So now that has been extended for the entire year. So anyone who chose to do that tax deferral for their employees, the employees have the full year to repay that tax deferral back. And so you can figure out payment plans spreading that out over an entire year. From the HR point of view, we did not see a lot of people elect to do this tax deferral, but if you did, this is a nice little option for how to pay back those funds. Okay. The Economic Injury Disaster Loan, EIDL, a lot of you may have heard a little bit about this here and there. The main focus was on the PPP loan, but a lot of people may not have qualified for the PPP loan. So this is another option. They have allocated $47 billion in EIDL assistance. So these are grant dollars and loan dollars that have forgivability. So if you use the dollars according to the guidelines under this program, you could potentially get those dollars forgiven. And these are specific to theaters or live venues, museums, K through 12 schools, colleges, and even childcare providers. So some of these institutions and organizations may not have qualified for a PPP loan. So this is a great option. If you know that you can't do the PPP loan dollars or you're not eligible, please look into this. There's a lot of money in this program that you may qualify for. You cannot do both. If you are getting the PPP loan, you will not qualify for this and vice versa. Take down this number, the 800 number for the SBA and the website. That can be a great place for you to get information if you need it. Whoops. Again, I'm going to go ahead and mute people just to keep that background noise down. Any questions about this program?
Keep going, Rachel.
Got it. All right, so on to our PPP loans. There is another round of PPP loan dollars, Paycheck Protection Program, to the tune of $284 billion. There's a lot of money in here. So understanding what that means, if you did not get the loan before, so you would be a first-time PPP loan recipient, then all of the rules from before apply. even if you got the loan and returned it all, you would still be considered a first-time loan recipient. And so the rules and parameters set in the CARES Act before for the PPP loan, even if you're just now getting it under the round 2, which is technically round 2, but for you, it's first time. So all of the loan parameters and requirements for last year's PPP loan are in place if it's the first time for you. Now, if you did get the loan before, you would be a second-time loan recipient. And again, there's a lot of money in here for second-time loan recipients, but the parameters tighten a little bit if you're a second-timer. So instead of being 500 employees, it's down to 300 under the round 2. 300 employees. And in addition, you have to be experiencing a 25% drop in revenue for Q1, Q2, or Q3 of 2020 comparing to 2019. So take a look at that, speak to your accountants, your CPAs, take a look at your dollars and numbers to make sure you meet these parameters if you're a second-time recipient. Also, the max last year was 10 million per loan, and now the max is 2 million. So just a little bit of a tighter parameters. And one of the things they've done, I know I've talked to a lot of you on this webinar about the forgiveness process and the forgiveness application. We're going to see some new forms for that. We don't have them yet, but we anticipate a new form completely for a second-time loan recipient. Loans under 150,000 will have a very easy loan forgiveness process. And the other loans, we expect to see a similar forgiveness form. The same parameters are going to be in place. Employee headcount, pay rates, all the same kinds of things for the forgiveness process. And we will help you with that information when we get it. And I'm sure we'll do a coffee break specific to PPP loan forgiveness. So if you're going to be one of the loan recipients, do not worry. We will take care of you as we move through this process. Okay, employee retention credit. So I want to spend a little bit of time on this, and I'm separating it between employee retention credit for 2021, and I want to address employee retention credit from 2020. So first, let's talk about 2021 and what it's going to look like for this year. It's the specific extension goes through the completion of the first 2 quarters of the year. So we had the employee retention credit last year in place, and that is extended, meaning it's still in place until we get through the end of the second quarter. But if you're using the employee retention credit in 2021, it looks a little bit different. So the credit amount expands by changing the formula. So we're still looking at the same amount of wages, 10,000 in wages, same as last year. But the percentage is different. Instead of figuring the credit on 50% of those allowable wages, it's 70% of the allowable wages. So the credit amount on the wages becomes $7,000, and using that 70% calculation. The difference is per quarter, per employee. So even if you use the employee retention credit last year and you got a credit of $5,000 for an individual employee, that's going to reset. So now in the first quarter, if you qualify for the employee retention credit, you can get a credit of up to $7,000 on $10,000 of wages for that same employee. And then again in quarter 2, provided you qualify. So you can get $14,000 in credits for the first half of the year based on these parameters. The current cap is $14,000, and it's based on $10,000 in wages in the first quarter and $10,000 in wages in the second quarter. 70% calculation takes you to $7,000 and $7,014. Now, this again may be expanded. Right now, it goes through the end of July, or the end of June, the end of the second quarter, and we may see that date change. But right now, that's what it looks like. So how do you qualify? Well, the threshold to qualify is 500 employees or fewer. And you might remember before there was that 100 threshold where the way the employee retention credit worked was you were paying wages to people who were not actually working or performing services. So now that threshold is gone. So it's 500 employees or fewer, and it can be whether they're working or not. But the difference is the decline in revenue. So as long as you can show a 20% decline in revenue from the quarter for which you're taking the credit. So meaning you're going to look at the first quarter of 2021 and compare that to the first quarter of 2019. And if you've got a 20% decline in revenue, then you would qualify. Now, also going back to that employee count, it's important to note that it is not per location anymore. It was specifically set up as per location for last year's employee retention credit plan. Now it is total. So if you have at least 50% shared ownership across your businesses and the total employee count is 500 or less, then you might qualify for this ERC. If that applies, then you take a look at the decline in revenue. So one other small piece is that you can take a look at the previous quarter. So if you qualify for the 20% decline based on your first quarter revenue of 2021 compared to your first quarter revenue of 2019, then that will also qualify you for the second quarter of 2021. So if the immediate preceding quarter qualifies you in this ERC, then you will also qualify. So same thing, let's say you're looking at January, you can look at the previous quarter. So Q4 of 2020 compared to Q4 of 2019 can qualify you for Q1 of 2021. I hope I'm not confusing everyone. We can answer questions on that if we need to when we get to it. Did I hear a giggle?
Yeah, that's just me. I was just going to say, I still think it's best to wait to the end to answer questions unless you feel otherwise. So it's your call.
Only if we have a ton of questions rolling in. Otherwise, let's keep moving because maybe we'll catch it.
Keep moving.
Okay. So now I want to go back and look at the ERC from 2020. And some of the original parameters, like I talked about the threshold for that 100 number. And the way the ERC was designed was that it was going to help you pay employees even though you were ordered to close or for whatever reason you could not operate. And the ERC allowed kind of a boost for you to pay those people anyway. And that was the 100 threshold. So if you had more than 100, you were paying employees who were not there. And if you were under that threshold, you were paying employees working or not, but you met that 50% decline in revenue threshold. And that's how you got the credit. And those still apply. So for 2020, if you're doing a look back on 2020, the rules of 2020 still apply for 2020. And why is that important? Because what they have said is looking back retro to the March effective date of the ERC, you can claim tax credits, even if you received the PPP loan. Originally, they said you cannot do the PPP loan and the ERC under any circumstances. Now that's changed. So you can go all the way back to the beginning, even if you got the PPP loan, and determine you may be eligible for some of these employee retention credits. But you have to factor in the rules from 2020 as well. So you're looking at, did you have a 50% decline in revenue for that quarter? Did you meet that threshold of over under the 100 mark? So employee count over 100, not working but paid. Under that mark, working or not, but 50% reduction in revenue. And then it's very important not to double dip. So you may have the PPP loan, maybe you got your loan dollars in May, but you were closed in half of March and April, you might qualify for some of these ERC dollars. And so what we would tell you is please reach out to your accountants, your CPAs, your finance firms, and have them take a close look at that for you and go through that information. And I also want to say, if CertiPay does your 941s, if CertiPay does your taxes for you, we're at the close. We're preparing all of the 941s for Q4 right now, and we're already at the deadline for preparing that. So we wouldn't be able to go back right now and do that. So if we do your 941s, we will absolutely help you and take a look at that. But give us a little bit of time to get through all the Q4 941s first. And then in the next few weeks, we can take a look at potential amendments to the 941 or some different ways of applying that credit. And same thing probably for your accounting firms. They're all working on Q4 941s right now and end of the year documents. And that's fine. You know, we can go back, and under this bill, they are aware that people are going to need to go back and make amendments. So there will be time to get that. No need to panic. We will get those credits down the road. And double dipping is always a main theme. You know, anytime your tax dollars and your payroll dollars under the PPP overlap, then it's one or the other. And most of the time, what we recommend and what the government is recommending on this is use the PPP dollars first. And then if you still paid wages above and beyond that, take a look at where the ERC might apply to you. And we'll get to those questions in just a bit. I see a few. So let's talk about the FFCRA, the paid leave, the Families First Coronavirus Response Act, the paid leave. This has been extended through the end of March, and it is no longer a mandatory paid leave provision. Now it's optional. You can choose, do you want to offer this paid leave or not? So take a look at a couple of things. First of all, the tax incentive is for private sector only. There is no tax incentive or credits available for public sector. So right off the bat, if you're private sector, then you may choose to add this FFCRA in. And if you do that, we want to also caution you from the HR viewpoint is be careful about it. Offer it to everyone. Do not pick and choose. You want to make sure that if you are going to offer the FFCRA, then turn it on. You're going to offer it, and that's it. And you're going to offer it for anybody through the end of March as this allows. And you're not just going to offer it to a couple people and not others. Just say, we're offering it, and that's that. The way the regulation reads is that if you decide to offer it, then you will be obligated to follow all of the guidelines and parameters put in place originally. So that would mean once you decide you're going to offer it, then all of the same regulations that were enforced originally will apply. And one really important thing to note is the hours don't reset. So it's a continuation. It's a bucket of hours that are available for an individual employee. It does not reset because of the beginning of the year. So if you paid somebody 2 weeks of COVID pay back in November, they don't get it again. They would still qualify for the expansion under FMLA. So if they needed childcare as a result of COVID for that maximum 10 additional weeks, that would still apply, following all of the same guidelines as the original FFCRA. But all of the buckets are added together. So there's no reset on that. You have a total, and it's one total from the beginning when this started last year all the way through March 31st of this year.
So just to reiterate, if you've already used the 80 hours, you have nothing left in 21.
That's right. That's right. And we've had some kind of wraparound, like people that were out sick with COVID the last week of the year and the first week of this year. So what does that look like? Well, you would have to pay them under FFCRA guidelines through the end of the year for that week that they were out, if they were eligible. And then you could decide if you wanted to continue the coverage for that second week for that individual or for anybody. If you're going to say as a company, we're not offering it in 2021, that's okay to do. And so that line would be drawn right there. If you at that point say, no, we're going to continue to offer it and you keep it intact for that first week, you're now offering it. So now you want to follow all the guidelines in place for FFCRA. But that's it. First week in 2020 and second week in 2021, that person has reached their 2-week max. And just to kind of recap that FFCRA, remember the 80 hours is the maximum for the first 2 weeks of COVID sick pay, but it's an average of hours. So let's say you have an employee who averages 30 hours a week, then that individual's cap would be 60 hours because it's the 2-week total of that individual's average hours. In addition, it's average pay. So if you take a 6-month look back on somebody's average salary, and you get an hourly rate based on that, that's the rate you pay for the average number of hours. All right. Are there any questions?
Rachel, while we're right there, just to clarify what you said about the deadline on the 31st, if you have an employee that went out on the 25th and they got 5 days of pay or 6 days of pay to the 31st, then it just stops. And as a company, if I choose not to continue, that employee gets no more money. They don't get to ride out the 80 hours, right?
That's correct. So if you're choosing as a company not to extend the FFCRA, then you would not be obligated to pay them. Now, what it means is you can choose to pay people whatever you want to pay them, of course, being fair and non-discriminatory across the board, but it's the tax credit piece. So if you're saying we're not going to follow FFCRA guidelines in 2020 at all, maybe that employee has sick time they can use. Maybe that employee has PTO they can use. And maybe you want to just say for that individual employee or for anyone who is out, rolling over into the new year for continuing those few days, maybe you want to pay it anyway, but then say, we're not doing FFCRA. So you would not take the credit, the tax credit for those few days. If you're saying we're not extending it, as soon as you say, yes, we're extending it, then you're following the guidelines through the 31st. But you can say, no, we're not extending it through the end of the year. Or we're ending at the end of the year.
Okay, you ready for questions?
I'm ready. Let's go.
One thing was they wanted you to go back over the EIDL information. So I don't know if you want to answer the questions first and then go back to that.
Sure. Let's see. Go back over it, or is there a question about it?
No, just to go back over the entire ball of wax. So maybe I should just give you the rest of the questions first and then we'll bounce back to that.
Let me just go hit it real quick and then we'll go on with questions. So the EIDL is additional funding through the Small Business Association. And in these funds, it's loan dollars and grant dollars for specific businesses and for specific causes, versus the PPP is basically a loan for small businesses, where this one is specific types of businesses. So schools, colleges, childcare, any kind of a live venue or a live, like an art museum or a science museum or an art school or anything where you've got this kind of live venue. There are some special grants and loan dollars available. And this we don't have a ton of information on this because it's very specific to each individual business who would qualify. So that's why I put the information up there. Send an email to the SBA, call that SBA customer service line, and get some additional information. And maybe you would qualify for some of these dollars. There's a lot of money in there. And if you are concerned that maybe you wouldn't qualify for the PPP loan, or you feel like the PPP loan is not the right avenue for you, this might be a place where you can get some additional help. Good?
Yep, you ready?
Yep.
The first question is, excuse me, do we know the average monthly payroll look-back time frame for the second loan?
They're going to do them the same way with the 2.5 calculation, but they may look at 2019 numbers. So that is an excellent question, and I would encourage you to communicate with your CPA, financial advisor, or even the bank if you're interested. But the format is going to be very similar. So they're going to do the 2.5 month calculation to get that loan amount. Again, there's a $2 million cap, so they may look at that number but then reduce it if you're at the cap. And then the other thing is, once we know the exact parameters, CertiPay will set up reports and easy ways for you to pull that information.
The next question is pretty specific. They want to know who at CertiPay they can talk to find out if they qualify for the ERC credit.
Okay, so for the ERC credit, if they qualify, so if it's somebody who is in, if we do all of your finances, if we do your 941 and whatnot, then we would be able to work with you to see if you qualify. But if you have a CPA or an accounting expert who you rely on for this information, that would be the place to go. If we're your financial experts, that's fine. We can help you with that too. Yeah, so I think it would just be maybe start with, do you have a CPA? And if it's us, then you want to call, then maybe ask your payroll specialist and see if there's somebody who can help you with that information. So this is because qualifying is really a business question more than a specific payroll question. You want to look at the revenue. So did you have a decline in revenue? What's your employee count? And then pretty quickly you can tell if you qualify. So if you've got that 20% decline in revenue, again, you're comparing this quarter, the 2021 first quarter with 2019. Now, if you're talking about specifically getting some additional credits from 2020, it's a much deeper dive. And somebody in our tax department can probably help you. But again, because we're finishing out Q4 right now, they probably can't get to that for a couple of weeks. So give some time there, and then that's where you start. I think I just answered 15 questions. I'm not sure.
Probably. Okay, the next question. So for the 2020 credit for ERC, this is only for employees you continue to pay, but they could not work?
Yes, at that 100 threshold. So 100 or fewer employees, if you had a 50% decline in revenue and 100 or fewer employees, and they are working or not working, you can use the ERC credits for those wage dollars. If it's above that 100 threshold, so 101 or higher in your employee count, then you paid employees who did not work. That's how the ERC applied in 2020. So you were paying wages for people who were not performing the services. And the other thing that's important to note, that employee headcount number is taken by getting an average of your employees from all of 2019. So if you look at your 2019 average number, that's the threshold that was used for that 100.
Okay, next question. Is there a factor of reduced revenue for getting the second PPP loan?
Yes, it's 25. So 25%, where's my PPP? Let me go back. 25% drop in revenue. And again, you're looking at Q1, Q2, Q3 of 2020 and comparing that to those same quarters of 2019 and looking for that 25% drop in revenue. So you would qualify for the round two. This is for round two people. You would qualify for round two if you had a 25% drop in revenue in any one of those 3 quarters comparing to 2019.
Okay, next question. With the suspension of business due to government regulations, would they also qualify for the tax credit in 21 in lieu of declined gross receipts?
Okay, I'm not sure. Yes, please.
It says, will a suspension of business due to government regulations also qualify for the ERTC credit in 2021 in lieu of a decline in gross receipts?
Okay, so if I understand it correctly, you're talking about being ordered to shut down in 2021.
That is the way I read it as well.
Yeah, so that's the way I'm reading it. So if you are ordered to shut down and you have the decline, they have to both be present for the ERC to be taken in 2021. And so you have to, and it's a 20% decline. It used to be a 50% decline. So that is now a 20% decline in revenue, again, comparing to 2019. And then that employee threshold, working or not, 500 or less. So if you've got that decline and you're a small business, you're going to qualify. But it's not, if you have one, you don't automatically qualify. You have to have both to qualify, both the employee threshold and the decline. So if you're closed, it doesn't automatically qualify you for the ERC. You have to have that decline in revenue. So if you're closed, you're going to have a decline in revenue. And then if you meet the employee threshold, you should qualify. The messages are popping.
Oh, sorry, I was on mute. What if, just talking away. What if there is a new company and there's no revenue to compare from 19 to qualify for the ECR or ERC, I'm sorry. So basically, if there's nothing to compare to. So there are some provisions. I don't have the exact parameters and I can get them for you. Cindy, just make sure you mark down who that is. But what they say is they're taking an average. You had to have been open and operating by February of 2020 in order to qualify for the ERC. So if you were not in operation before that and you opened during the pandemic, there's nothing to compare. So you won't be able to show the decline. So you would not be eligible for this credit, but there may be some leeway or specific information in there, and we will get that for you. Next question, FFCRA, employer's decision to pay employees as COVID timeout for 21. Clarification. I think they just want you to clarify what they can say, what they legally can do and not do.
You can legally say we are not offering FFCRA paid leave any longer. So what you want to do is be consistent. If you want to offer this as a business owner, then you will be eligible for the tax credit. So meaning if you pay somebody's wages following the FFCRA guidelines, then you can claim dollar for dollar credits for those wages paid against your 941. So the same rules apply. All you're saying is whether or not you want to do it starting January 1, and the decision is yours. So if you decide to do it, you will be eligible for those tax credits for any wages paid. If you decide not to do it, that is okay. And so again, HR viewpoint is be consistent and be careful not to discriminate. So if you decide you want to offer the FFCRA, you offer it to everybody, and you would be obligated to follow the original guidelines.
Okay, next question. It says, what do qualified wages consist of? I see that it says qualified wages and health benefits. I'm not quite sure what exactly, Luke, that you're referring to, unless Rachel does off the top of her head.
Might be talking about...
He's talking about
what
ERC.
Is it? About ERC. Oh, okay. So qualified wages are any kind of income that you're paid, commissions, bonuses, hourly wages, salary, any of those things. In addition, you can add to that total health premiums and, the health insurance premiums that you pay on behalf of the employee. But the total number is the total number. So whatever you want to include in that 10,000 wage number, that you throw everything in there, anything you pay toward health premiums, dental premiums, bonus dollars, salary dollars. Once you get to that 10,000 cap, when all those things are thrown in the bucket, it's 10,000 cap. It's not 10,000 cap on wages plus other health insurance and whatnot. It's everything is bundled in. So maybe you only paid 8,000 in wages, but you had 2,000 in other qualified expenses like health premiums and whatnot that got you to the 10,000 total. You can take that 70% credit on that total number. But all of those items are calculated into the wage bucket.
Okay, Allison gave us some really good information from the IRS website, but I'm going to hold off for a few minutes until we get through all the questions first. So the next question is, can you get the second PP, can you draw the second PP loan if you did not utilize the PP loan the first time around? So can you do it the second time without doing it the first time?
Right, so if you got the loan the first time and returned everything and did not use the first loan, then you would be considered a first-time PPP loan recipient. So you would follow all the guidelines from first-time recipient.
And that would follow suit. You'd also be a first-time if you didn't use it the first. If you never applied the first time, you're more than okay to apply the second time.
Right. Anybody who didn't apply before is now a first-time loan recipient.
Okay, and the last question before I give the IRS message information. Since we are a part of the CertiPay PEO, you guys take care of tax credit for our company for FFCRA we used in 2020. I'll answer that. Yes, if we do your taxes, we will take care of all that for you.
Yeah, and if you're using us for your payroll, we have codes for that. So you're using the FFCRA codes that we have in place, that C19 full pay and partial pay codes. And then we use those reports to pull the credits for 941s. So we've got your back there.
Okay, now Allison had pulled something off of the IRS website for us. Excuse me, I have a frog in my throat. It says employers, including tax-exempt organizations, are eligible for the credit if they operate a trade or business during calendar year 2020 and experience either the full or partial suspension of the organization of their trade or business during any calendar quarter because of government orders limiting commerce, travel, or group meetings due to COVID, or a significant decline in gross receipts. And that's pretty much just, what Rachel said earlier, but there's the actual verbatim verbiage from the IRS if you want to cut and paste that out of the chat box for your own edification.
Right, and keep in mind that statement is for 2020.
Correct.
Yeah. And again, it says significant decline in gross receipts. So for the ERC in 2020, the significant decline number was 50%. So in 2021, the significant decline number is now 20%.
The last comment I have is from Jose. He says, "We rock." We thank you.
Thanks.
So, that's a nice way to end it. Does anybody have any more questions?
That's the look we're going for.
Right? End of comment. Turn off the computer. If you guys have
were
any
there
questions, please let us know right now.
anything else? Did we get them all?
Yes, ma'am. We have answered everything in the chat box.
Fantastic. And guys, I want to remind you that we know things are changing on a daily basis, and we are keeping a close eye on it. As soon as we have any additional information, we will bring it to you in some format. So keep your eyes open for some future coffee break topics. And after this, our next coffee break is going to be, we're doing every other Thursday at 11:30, and we're going to be covering the employee life cycle. So our next coffee break, we're going to start with the hiring process and the search process, and what does it look like on the front beginning side of the employee life cycle. So please join us for these coffee breaks. And if you want this recording down the road, go to our website where you can find all of the recordings of the coffee break under the news tab. Look for coffee break, and you can find all of these recorded versions in there. So this one and all the ones from 2020. So again, on behalf of CertaPay and Janet and Cindy, we thank you for joining us this morning. CertaPay appreciates you and values you, and we want you to know we are here for you, and we are going to have a great 2021. Thank you.
Rachel, before we hang up, I have one thing. Someone asked if there was a good place to go to get some plain language on the ERC.
Well, you can do some searches if you just put ERC in. You can get some good searches out there, but the information is confusing. So just take a look at what's available and see if you see anything good that makes sense. I think we're going to probably put together just a regular document that we send out to people with some of the information we talked about today. And so keep your eyes open for that.
Okay, everybody have a great day.
Thanks, guys. Have a great day.